Let's talk about SoFi and break down the recent data points to better understand what drove the stock's movement. I'll walk you through what's been happening, explain some key events, and provide a broader perspective on everything you need to know. First, let's get into what led to SoFi's performance today. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi experienced a 1.69% drop with an initial sell-off at the start of the trading day. The stock hit a low of $9.62 before bouncing back later in the day. But what's really interesting here is that the movement seemed somewhat excessive and unnecessary. There was no specific news directly related to SoFi that triggered this. In fact, the sell-off was more connected to the broader market trends rather than anything the company did itself. Let's look at the bigger picture. Today, a significant number of shares were traded, 50.1 million compared to the average of 45.5 million. Many of these transactions involved large sums of money, above $100,000 in value. Some were in the range of millions, which are typically executed by institutional investors, not retail investors. Unfortunately, many of these trades were sell orders. This selling activity happened right after the market opened, which caused the stock to plummet for a short time. The reason behind this sell-off? Surprisingly, it was due to good economic data. Both retail sales and initial jobless claims exceeded expectations, signaling that the economy is in a strong position. Normally, good economic news should boost market sentiment, but in this case, it had the opposite effect. Why? When the economy is doing well, the Federal Reserve is less likely to cut interest rates. Investors were banking on rate cuts, and when those expectations diminished, the market reacted negatively. The probability of a 25 basis point rate cut dropped from 95% to 65.3%. This shows just how much the market hinges on monetary policy, despite strong earnings reports from many companies and positive economic indicators. Now back to SoFi. Despite today's price dip, there was no company-specific news to justify the drop. No filings from the SEC, no major announcements, just a reaction to the broader market's mood. One interesting piece of news from the broader financial space, though, is that Robinhood hosted a major event. It's a reminder that SoFi might benefit from hosting a similar event in the future, perhaps in 2025, to showcase new technologies and developments. This would allow SoFi to make a splash in a more organized manner rather than through scattered announcements. Robinhood has been doing fairly well in recent months, and their event was well received. In other news related to the financial markets, Tanner, who attended the Robinhood Summit, made a post that caught my attention. He shared an interesting discussion he had with Vincent Daniel, who mentioned that if Donald Trump wins the next election, bank stocks could see a significant increase. Conversely, if Kamala Harris were to win, we might see the opposite effect. It's an intriguing take on how politics can impact financial markets, especially considering how elections can influence sectors like banking and finance. Although I don't usually delve into politics on this channel, I'd love to hear your thoughts on this. Do you agree with this prediction? Today, we also saw short sellers make some moves. Short sellers returned 1.23 million shares, meaning they're betting less against SoFi at the moment. Currently, 16.33% of SoFi's float is shorted, which amounts to about 170.84 million shares. The cost to borrow these shares averages 0.67% with a utilization rate of 35.76%. This suggests that short sellers are taking a bit of a breather, which could be a sign that they expect SoFi's price to stabilize. In terms of options activity, today there were 14 million call options and 6.05 million put options traded. Of these, 60% were bearish, which suggests a lot of traders are anticipating more downside for SoFi. Between 9 and 9:05 this morning, there were two large bearish transactions, one worth 1.59 million and another at 1.17 millions. These were multi-leg institutional trades, not from retail investors. One notable trade involved the sale of a call option set to expire on November 1st, a little over 2 weeks from now. Another trade involved the purchase of a $9 put option set to expire on November 15th. Both of these transactions signal a bearish outlook on SoFi for the near term. Now, while most of the options activity was bearish today, there are some positive signs as well. For instance, some traders are betting that SoFi stock will reach $10.50 by early November. When looking at put options, many seem to be targeting a price around 9.50 cents. The presence of bearish options activity around this price level suggests that traders are hedging their bets, but there's also hope for a bounce back in the near term. There's another layer to this story when we look at open interest in SoFi's options chain. At the $10 strike price, there are about 31,000 open contracts, which shows a lot of interest in that price point. Likewise, there are significant amounts of open interest at 9 and 9.50s. The sheer volume of options contracts at these strike prices reveals that market participants have a strong financial interest in keeping SoFi below $10, which could explain some of the downward pressure on the stock. Looking ahead, the key price levels to watch for SoFi are around $9.83 as a strong support level and $9.93 as a resistance level. The stock bounced off the $9.67 level earlier today, and it's currently trading between these key levels. With continued volatility expected in the market, we could see some more fluctuations in the coming days. In summary, SoFi's recent dip was more a product of broader market forces than anything specific to the company. With strong economic data reducing the likelihood of rate cuts, the market reacted negatively. However, SoFi's fundamentals remain solid, and the company could continue to see positive momentum in the future, especially if it takes a page out of Robinhood's book by organizing its own investor-focused events. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.